Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing from Bridgeline Digital, and let me tell you, it's a bit like finding a hidden treasure, but then realizing you have to assemble it yourself. We'll see if this puzzle is worth the effort. We are looking at their recent filing about raising money, which might sound boring, but it's actually a peek into their plans and how they see their own future. This report is called an 8K, and companies file these when something important happens, something that investors should know about right away. In this case, it's all about getting more cash, which can be exciting or concerning depending on why they need it. The report is dated March 24, 2025. The big news is that Bridgeline Digital is doing two things to get money. First, they're selling shares of their stock directly to some investors. This is called a registered direct offering. Second, they're selling shares in a private placement, which means they're offering them to a smaller group of specific investors. Let's break down the first part, the registered direct offering. Bridgeline Digital made an agreement with some buyers to sell 1 million shares of their stock at $1.50 each. This should bring in about $1.25 million before fees and expenses. Westpark Capital Inc. is helping them with this, acting as the placement agent, which means they find the buyers for the shares. There are some rules in place to prevent the company from issuing or selling more stock for a while after this deal closes, which is a common protection for the investors buying these shares now. The shares are being offered under a previous registration statement, basically a document that allows them to sell these shares legally. Now let's move to the second part, the private placement. Here, Bridgeline Digital is selling shares to specific investors. They've made agreements with these investors to sell about 4,539 shares at $1.523,440 share, dollars before expenses per subsinad. Let's move on, $2 per share. This should bring in around $720,440 before expenses. What's interesting here is that some of the company's own leaders are buying these shares. The CEO is buying about 50,668 $. worth of shares. The chairperson of the board is buying $10,000 worth. And a director is buying a whopping $600,000 worth. This could be a good sign because it means that the people in charge believe in the company's future and are willing to put their own money into it. These shares haven't been registered with the Securities and Exchange Commission, so they're being sold under exemptions that allow them to skip that process. There are some details about warrants being issued to Westpark Capital, who is helping Bridgeline sell these shares. Warrants give the holder the right to buy shares at a set price, and this encourages them to work hard to sell the initial shares since they can profit if the stock price goes up later. All the details about the shares being sold, both the ones in the registered offering and the private placement, are considered unregistered sales of equity securities. This just means that they're being sold without going through the full registration process, usually required by the Securities and Exchange Commission thanks to certain exemptions. The company also put out a press release to announce these deals, which is pretty standard when a company is raising money like this. Now let's step back and look at the big picture. Bridgeline Digital is raising a significant amount of money through these two offerings. The fact that some of the company's leaders are investing their own money in the private placement is a vote of confidence, but it also raises questions. Why do they need this money? Are they planning to use it to grow the business, pay off debt, or something else? Bridgeline Digital in general seems to be trying to strengthen its financial position. Raising capital can provide resources for strategic investments, acquisitions, or simply to bolster its balance sheet. The involvement of key executives in the private placement signals a strong belief in the company's prospects. However, these actions also dilute existing shareholders' ownership, which can be a double-edged sword. One of the risks could be how they plan to use this money. If they use it wisely, they could grow and do better in the future. If they don't, or if the market changes, they might struggle to make the most of this opportunity. So Bridgeline Digital is at a crossroads. They have a chance to use this new capital to move forward, but they need to execute their plans carefully. The company's future depends on how well they manage this moment and whether they can turn this financial boost into real growth and success. Thanks for tuning in to Corporate Decoder. Give this video a like if you found it useful, and don't forget to subscribe for more insights into the world of corporate filings and financial news.